once the blood is in the water and people say, oh my God, the market's going down, now everybody rushes to put their property on the market, which forces the market down and everybody's prices go down. So when the market floods with all these properties that are going to sell, then there's no holding value because the market is going to dictate that your prices go down. Hey, what's up all of my real estate peeps? This is Brian Lucier with another episode of a golden nugget from the Why Not Real Estate podcast series. And today I'm going to look at the overall 30,000 foot of market cycles. If you're a first-time real estate investor, as I was back when I started out my trek, did not even know that market cycles invested, and I almost got caught in a really bad trap. So take notes, buckle up, and we're going to unpack market cycles. So let's start with buyer's market stage 2. So buyer's market stage 2 is right at the bottom dip of a market when it starts coming back up again. This is when the prices start coming up. So how do you know that you're in a buyer's market stage 2? Well, demand, we're starting to see beginning to rise. More buyers are qualified to buy at lower prices. For property values, we're seeing low values, but slowly starting to increase. This is all within stage 2 of a buyer's market. Supply, the market's starting to buy all the properties that are out there. Time on the market is decreasing. Foreclosures, the competition is fierce because this is at the bottom of the market after all the disaster has happened. And then business and job growth, we're starting to see job growth begin to grow. We'll see advances and incentives for corporations to relocate. And this is something you can watch on city data. So if you get onto those websites, you'll be able to get all that stuff going on. There's virtually no construction at the bottom of the market because real estate has tanked. Now, on a side note, we're still $4 to $5 million short of rental living spaces or dwelling units, single family homes in this country, the United States right now. So there's still, supply and demand is still way off. And this is unlike any other market cycle. But let's keep going, okay? Vacancy rates are low and beginning to drop. This is at the bottom of the barrel. Why? Because rents are at the lowest they've ever been at the bottom of a buyer's market stage 2. So we've gone all the way down, the knife has fallen, it's hit the ground. And this is the worst time if you've been owning a property, but this would be a time for you to start buying properties at the bottom of a buyer's market stage 2. The next market cycle is a seller's market stage 1. This is when everything's starting to slowly climb back up. And you'll see, as I've seen after a couple market cycles, it drops really fast, but it crawls really slow. So here, the seller's market stage 1, we're going to start seeing demand is rising. It's starting to, more people are looking for assets to buy, properties to buy, investment properties. We're starting to see property values rise again. Now, that's not today. This is in a seller's market stage 1. Supply is dwindling. There's not really a lot out there. At the end of buyer's market stage 2, everything got scooped up by the investors out there. So there's not really much on the market right now. What is on the market still around in a market, seller's market stage 1, is very short on the market. It doesn't stay long. They're still getting scooped up. So one of the best indicators of this stage is construction is starting to pick up and get into full swing again. This is usually a 1 to 3 year spike in permits where now the housing's at the bottom and now people are starting to get back into the game. Low unemployment is another factor in seller's market stage 1, and rents are rising. So that's something to look at too. For a seller's market stage 2, this is the next market up. This is when you get all the way to the peak of the mountain and start to get near the top. Here, demand for rental properties and investments is very strong. Property values, sellers are waiting longer to sell because the prices are inflated. So this is the time in the market where the prices are really high for real estate. The time on the market's beginning to increase. Business and job growth is beginning to slow down. For construction, it's starting to hit that equilibrium where there's too much actually being built. Everyone's been ramping up, and now there's almost too much being built. We're not there yet because we're still $4-5 million under what the market needs. Unemployment, we're starting to see it increase, so people are starting to lose their jobs. It's a tumultuous time. And rental rates are rising slowly, but starting to level off. So I'm going to do this in another video and explain that I believe we're in Massachusetts right now in the seller's market stage 2 with 1 foot still in a market 1, stage 1 seller's market, and 1 foot going into a buyer's market stage 1. So we just talked about a seller's market stage 2. The final part of the market where I think we are now, and if we're not there, we're going to be there very quickly, is a buyer's market stage 1. This is right as things start to drop. Now, just like a roller coaster, as you start to go over the top, it's very exhilarating. It's like, oh my goodness, the price is going down and you want to buy everything you can. But I would strongly suggest you ride that roller coaster down to the end, because from here to there, those prices are going to drop even further. So resist the temptation in a buyer's market stage 1 to buy all of those good deals that you're seeing, because there's going to be more of them out there. So for demand, now we're starting to see prices falling. We're not seeing that yet. All right, prices are still up there. Prices are still inflated. So I think we're still in a seller's market stage 2. For demand, prices would be falling. For property values, they'd be starting to fall. We don't see that happening yet either. Oversupply, and everybody knows it. No, we're not there yet. We've got to wait for the roller coaster to go down. And this is the funny thing about a market, right? Once the blood is in the water and people say, oh my God, the market's going down, now everybody rushes to put their property on the market, which forces the market down and everybody's prices go down. So when the market floods with all these properties that are going to sell, then there's no holding value, because the market is going to dictate that your prices go down. Here, we're going to see foreclosures sharply rising, because now all these prices are dropping and rents are dropping. People aren't going to be able to meet those mortgages. If they're an adjustable rate mortgage, it's going to adjust on them. They're going to be upside down, having an alligator on their neck that they can't afford. So they're going to have to sell those properties or foreclose or short sale. Maybe you do a subject to. Those are all different topics for another video. So construction right now, with the prices going down, is dead. You've got tradesmen out there looking for work. They're unemployed. Might be a good time if you're buying properties or have properties that need to be fixed up. Deferred maintenance, this would be a great time to get tradesmen in there, probably at a reduced price, to get your properties where they need to be. And then unemployment is the best indicator of this stage. Unemployment reaches the height, the most people out of work, and rent rates are falling. So that's a dangerous time to be owning. But if you bought right, you bought in the right market, you have your reserves, you figured out your contingencies to property values, maybe drop 20%, you're going to be okay. But property management is key. Taking care of your tenants is key. Taking care of your property is key. Taking care of your maintenance is key. So if you're self-managing and the price is going down, you still have to do stellar property management and stellar customer service. You've got to be there. So again, just to look at this one more time, buyer's market, stage 1, the buying strategy. Rents are increasing, but slowly. This is the best time to buy at the bottom dip when things start coming up. It's called the millionaire maker in the market cycle. Be smart, only pay market prices. There's a lot of strategies there we may cover on another video. Seller's market, stage 1, this is where the prices are going up. This is a great time to buy and hold. long term or until you see the market start to turn to seller's market stage 2. But definitely you could buy, you could flip for immediate profits. So it's a great time. And what we've seen historically over the past 8 to 10 years, it's been wonderful. We've been in a seller's market stage 1. I strongly feel right now we're entering seller's market stage 2. Flip unless you really want to hold for a long, long time because you may be stuck with that property. Keep your profits, keep your cash reserves, hold on to them, and get ready for the exceptional deals that are going to be coming in buyer's market stage 1, which is where I think we're heading. Right now, we're in July 2024. We're at the beginning of an election year. We don't know what's going to happen. I'm not overly concerned. I've been through a couple market cycles with Republicans in market, with Democrats in market. I still made rent. I'm okay. So what's the strategy for buyer's market stage 1? This is the bottom of the market when the prices are the lowest. If you don't know where the bottom is, sit tight. You're going to know when it stops bleeding. Here, you only want to buy deals for cash flow. Otherwise, you may be subject to holding on to something that's even going to lose more value. Now, don't be worried, because if you baked into your numbers that you have your reserves, that you can withstand a 20% drop, even if you're buying in a buyer's market stage 1, you're going to be okay. You're going to get around that corner. You're going to hit buyer's market stage 2, and you'll be all right. So everything that I've just relayed to you, I've got to give all the credit to Dave Lindahl, RE mentor. If you've never heard about market cycles before, definitely look up Dave Lindahl on Amazon. Grab some of his books, read his books. For $20, $30, you can educate yourself and have all of this at your fingertips at any time. This is Brian Lucier reviewing market cycles here on the Golden Nuggets from the Why Not Real Estate Podcast, and we're signing off, and we'll see you on the next one.